All right, let me open up the YouTube live stream. Ba-bum, ba-bum, ba-bum. All right, I'm posting the link to the YouTube live stream in the Discord chat of Live Trading 4. I know someone else is live streaming at the same time, so I'm just gonna be live streaming for whoever wants to watch my live stream. There's a live stream for the last trading day of 2022, and I just want to point a few things out. So here on the SP 500, let me get rid of this line actually. Today's price action was interesting, really interesting actually. We can see that right now we are ranging. We haven't had a bias confirmation as of right now for the New York range. For the London range today, we had something interesting. We had a false signal basically during London, because at the beginning we had a bullish bias confirmed right here and formed some sort of a double top pattern right here. Beautiful double top pattern. And let's color this actually in a red color because we consider this resistance. Make it red, and if we drag it out to the left side, we see that this double top clearly occurred over basically during the Asian session or Asian range low consolidation right here. So this was general support and resistance even from yesterday, a area where we bounced off from and continued moving further to the upside. So in retrospect, this is a classic resistance level or a support level that has been turned into resistance as soon as we broke through it. Below this level we also had a few fair value gaps that like to be filled in, like for example this one. Basically just retesting this old support area that has been turned into resistance. So after being faked out right here with a bullish bias, I could imagine that some of our traders here using the master IDR range right here, or the ODR range, maybe entered somewhere around this area or maybe even here for a retirement setup. But unfortunately our low right here, our IDR low, ODR low, got violated, and right now we are continuing to move further to the downside. What I want to point out today is the importance of your previous day's high and low, and therefore we are quickly deleting everything we drew on the chart. We are going to disable the DR/IDR indicator. So I saw it today happening on GBP USD, and I actually managed to catch a beautiful, I think 55 pip trade all up, all based on the concept of the previous day high and the previous day low. So what I'm doing now, I'm using an indicator from Unknown Unicorn right here, daily high and low. So you don't have to draw it out every day. Makes your life a lot easier. Let's have a look at it right here on the S&P 500 for this week's price action. If it's going to load. I think my internet connection is annoying. Let me check my connection for a second. Okay, here we go. Just took a little bit of time. So those two lines represent your previous day high and previous day low. And what we see most of the times is that we actually are seeking reversals below our previous day's low and above our previous day's high. So for example, yesterday, where we had this parabolic movement to the upside, we did not violate our previous day's low that has been created right here at 3:45 p.m. New York local time. This blue line has not been violated, even though we basically consolidated right above it. Out of this consolidation, usually at least what I would like to see before I enter, for example, over on the overnight range right here, the entry yesterday that also I think TheMas7er took with a 33 risk reward trade. I think he posted it on Twitter and lots of people were complaining why he's posting something with such a narrow stop loss. In my opinion, that's just coming from experience. I mean, if you've been trading for 20 years almost and you specifically know what you're doing, it's okay to use a very narrow stop loss. If you're in your first year or second year of trading, it's all fine to use a big stop loss because you don't have the experience yet, but that experience is eventually going to come. Now trying to force trades with a 5 tick or 10 tick stop loss, for example, a trade from here, from the ODR range, if we look at it, I think TheMas7er entered somewhere, I think right here on the DR high, with his stop loss right around the IDR low. For him, it's okay because he knows what he's anticipating. He created this whole model bet, and he didn't create it, but he shared it with everyone for free. That's the main part. He knows what he's doing. He's been doing it for many, many, many years. So yeah, if you're a beginner trader, it's all good if you place your stop loss right here because you're not certain. Or your risk management is basically depending on your stop loss, but it's okay. You're learning. You're learning with every trade that you're actually taking. Let's say, for example, you don't know what you're really doing and you just started using the strategy, let's say end of November, beginning of December, and you're already trying to force trades with a 5 tick stop loss. Most of the time, I can promise you, you're gonna get burned. Trade's gonna hit your stop loss and then they continue right into the direction that you anticipated. So for the beginning, for your first year or your second year, I mean, it hasn't even been 2 full months since this strategy has been released. So take your time, it's all good. And use bigger stop losses just to protect yourself and your positions, and you're all fine. Once you got that experience using this strategy or other strategies, it's fair enough to use a 5 tick stop loss, for example. Oh, okay, my mic on Discord was muted. That was pretty unnecessary because I've been talking for quite some time. I think for everyone who is watching the YouTube live stream, they should have been able to hear me. What I was talking about basically is I saw a post today from TheMas7er himself where he took an entry right here on the ODR high. I think it turned out to be a 33 to 1 risk reward trade, and I saw a few comments complaining why he's using such a narrow stop loss. And in my opinion, it's fair because he knows the ins and outs of the system. He's the one who actually created and shared it with everyone. Keep that in mind. So, and he's been using it for over, I don't know for how many years, could be even more than 10 years. And we basically just knew about the strategy for the past month, maybe 2 months. And of course, if you're a beginner trader within your first year or second year, don't try to use a 5 tick stop loss. In my opinion, it won't help you, it won't bring you much. Use a bigger stop loss, for example. Choose a stop loss right here of 16 ticks. That's fair enough. I mean, you're a beginner, you're learning. After 10 years of experience, of course, you can even go for a smaller stop loss if you're very confident in the setup and you know exactly what you're doing. Then you can, of course, do this. All right, let's continue with our analysis. Let's go back to current price action right here. We got a slight indication that prices might want to continue bullish, so we are going to check for fair value gaps and areas of interest from which we bounced off. All right, so we are going to grab this fair value gap from over here quickly. This has been the most recent area of support from which we bounced, and now we are holding resistance right here on our DR high. So we're going to color this in red, and we are going to color this one in green, which is a fair value gap, which is actually lining up perfectly with our IDR low. So we will see what's going to happen, how we are going to react from those two areas. The market opened up bullish and then quickly reversed and took out. We see we actually get a bearish reaction of the supply zone. So we will see what's going to happen. I'm not trading today anymore because I already made my profits for 2022. I'm happy with everything. Now it's time to reflect. I just wanted to share a little nostalgic live stream for the last trading day of 2022, emphasizing the importance of your previous day high and previous day low. So if we look, for example, at yesterday, we saw that with the DR IDR, we've been waiting for our 0.5 standard deviation here, right, this level at the price of right here 3883 and a quarter to be hit after we had a successful close above our DR high, pullback, continuation to the upside, consolidation, consolidation, consolidation. But what I saw is I actually entered into a short position right around this time here because I saw the opportunity of a beautiful volume being trapped up high above our previous day's high opportunity. I used a fairly big stop loss. My stop loss was sitting right here on the top of this wick, targeting this fair value gap down here. I didn't want to target more. I was happy with a 4.27 risk reward trade, and I was lucky because I was able to close out my position prior to stock market open right here at 9:30. And also I had a very great trade setup on pound US dollar, which also ran for 55 pips all up, also based on our previous day high and previous day low. So to display the previous day high and previous day low on your chart, I used the indicator right here from the daily high low by unknown unicorn 805655. And this tends to work out so many times, especially if you look for classical charting patterns above those previous day highs and lows. Okay, so for example here, if we break it down to a 1 minute chart, let it load quickly. So here we go. So this is our previous day high, which is also lining up with our previous day New York range. It's not loading right now, but you can trust me. I did the whole analysis yesterday. And if we now break it down to a 1 minute time frame, if my internet connection is allowing me to, come on. Don't want to wait too long. In the meantime, we can check the DXY for what DXY is doing. The DXY has a confirmed bullish bias here on the 5 minute time frame, so we will see how that is going to play out. We also had a bullish divergence on the Scalper Pro. This is one of my indicators. We formed a higher low on the Scalper Pro and a lower low on the price action chart, giving us a beautiful opportunity to, for example, enter long on this bullish engulfing candle. Okay, but let's go back to the ES. So if we look at this 1 minute time frame, we see basically just a complete sideways movement right here, high to low. We have been waiting for our take profit target to be hit right here at 3883 and a quarter. Unfortunately, it did not play out, but looking at this with your previous day high and low, it's going to make more sense. So above your previous day high and below your previous day low, those are very, very, very interesting areas of liquidity, in my opinion, that you want always have on your chart, always, no matter what. I'm going to show you another example that happened actually today that's going to emphasize more on this point. So actually, I don't like this 1 minute chart. Looks very choppy and ugly right here at our previous day high, trapping volume up high, up high, up high for a reversal to the downside. So basically that most of the retail traders or traders that got into the market long right around this area are being trapped. So because someone has to pay the smart money traders that actually went short above our previous day high afterwards. So because Every time someone's making money, someone else has to lose money. And the best way to do this is to make traders believe that we are actually breaking out, even on a higher time frame, even on a daily time frame. They make traders believe it's breaking out. They get them positioned long or short, depending on the setup. And what they're actually doing is they're taking the opposite side of their long positions. So they're going short because at the end, someone needs to pay the short sellers if prices continue to fall. And that's why the previous day high and the previous day low are, at least for me, very important areas to look at. So if we look at this price action right here, we saw we made a last higher high right here. So this is our swing high, which was just a shy of, I think, a few ticks to hit our 0.5 standard deviation, making this low our most recent swing low. We broke this low right here with the wick of this candle right here at 315. Also interesting. So we had a market structure shift, so we can label this break right here. I'm gonna use my template, change of character, into the bearish direction. We had a fair value gap right around this area, but I still didn't like it. It didn't give me enough confluence to enter into a position. Right afterwards, we pulled back up and raided a few more liquidity pools before actually continuing further to the downside. After seeing this big doji, this big indecisive candle, followed by this massive bearish down close candle that basically took out 1, 2, 3, 4, 5, 6 bullish candles. I know there's one bearish candle in between, but I'm counting it as a bullish candle within this uptrend, and it closed lower than all those closes right here below. That basically brought that change of character. And we also this time left behind a beautiful bigger fair value gap. On this fair value gap, I took the opportunity and I entered into a short position right here on this candle with my stop loss up high. Of course, I could have used a stop loss at our previous day's high, only 12 ticks, but I'd like to play it safe. I don't like to get stopped out and enter again and again and again. So I decided to go with a bigger stop loss of 30 ticks. And now we have our change of character confirmed, and we can let the chart do its thing. We can, before we actually do this, we can look for some sell side liquidity targets. My first target was, come on chart, stop, was right here below these lows, relative equal lows. I'd consider those two, so we can actually make it look like this. So this is an interesting area to look at. Those relative equal lows. We also have a few fair value gaps that are left behind, like for example this one. This would also be my next target area, and at least to remitigate this area down here. I didn't target our previous day low, even though it could be interesting, but this seemed just too far off for our last trading day of the year. And now if we keep on playing this chart, we see that very quickly. Let's drag our take profit target down into this area for a 1.37 risk to reward trade. That's a total profit of 41 ticks, with a very confident setup that this thing is going to continue lower, because we are inside, or basically inside, a huge buy side liquidity pool right here above our previous day's high. Now if the chart is actually going to play, we might see something form. Alright, so we see prices dropping like pretty much hectically, very aggressively. That's what we were anticipating. If it didn't do that, I perhaps would have closed out my position early. And we will see when we are going to hit our first take profit target down here, where I would actually move my stop loss closer to break even, maybe at our previous day's low, previous day's high, sorry. My internet connection is pretty bad, so I think I'm just going to skip over to real time if it's going to load. I'm not sure what's up with it today. Let me check it for a second. All right, I might have fixed it. Let's see. Still loading. Quickly do a quick comparison of our US indices. So none of the indices had, oh, Nasdaq already had a bullish bias confirmed. That's interesting. And US 30 looks pretty similar to what we see here on the SP 500. So on Nasdaq, we already have our bullish bias confirmed, where we could look for a pullback maybe into our 50% area or our opening price of the DR range for a continuation move further to the upside, since our bias is already confirmed bullish. Go over to our ES chart. It's still loading. Man, I freaking hate my internet right now. Come on. Maybe if we load it completely new, it's going to help. Come on. So here we go. Now we just have to wait for our drawings to appear on our chart. Come on, what's happening today? Perfect. So we see we got really close to our sell side liquidity target, formed a double bottom. We pulled back, continued lower to eventually hit our first target right here. As soon as we broke through this area, I would have certainly moved my stop loss closer to my stop loss to minimize my risk. I wouldn't have moved it to break even. You could have also moved it to break even depending on your entry. Let's say we just leave a 12 tick stop loss on there. That's almost like a break even depending on how many contracts you're actually trading. But we saw as soon as we broke this area where we actually bounced off right here at 10:30 and then again at 11:20, this area acted as further resistance for the overnight range. So if we turn on our DR IDR, we saw that earlier during the stream I was talking about the fake out we had of our DR IDR range for the overnight session, where we closed above our ODR, giving us a bullish bias, but unfortunately we did not continue going up higher. We actually got rejected right here with this double top pattern, which is lining up perfectly with our previously drawn support and resistance, or our first sell side liquidity target. So here we have it. We formed this beautiful M formation here, this double top pattern, for a continuation trend further to the downside. But now I'm actually going to disable it, and our next profit target would have been this fair value gap that has still been left unmitigated, which was hit right here and then at 8:25, so 5 minutes prior to any news that were happening today on the S&P 500. Very simple trade setup on S&P 500 for a total of 3.42 risk to reward ratio. Of course, if I would have used a very narrow stop like here, that could have actually been even a higher risk to reward ratio, but that's not my goal. I like to play it safe and give it a little bit more breathing room. That's just my trading style. And yeah, we had a beautiful drop further to the downside. Another great example why the previous day high and low is so important. We saw it today on pound US dollar. So let me go to a 5-minute chart and quickly delete all the drawings. Turn off my indicator right here, and actually also the candle coloring that comes with it. Alright, so now we have normal candle colors. We have a Session Pro indicator. That's my personal indicator to basically draw the kill zones on the chart so I don't have to do it manually. We have our midnight opening or our midnight candle right here. Let's make this a thick line. And we again see our previous day low right here that formed during the London kill zone, and our previous day high that formed during the New York kill zone. So this is our range. Let me extend that out. right here, make it a white line, continue it out, and right here our previous day low. No, actually, okay, this wasn't our total low. Right here our low happened. So this is our previous day high and our previous day low. And why this was so important today is you saw it here. So first of all, starting when I started trading this morning during the London kill zone, right here, this blue box, I was looking to target, especially after this impulsive move to the upside. I really wanted to see this area of buy side liquidity above our previous day high to be targeted. Unfortunately, I entered on the retest of our VWAP right here with this bullish engulfing candle. Unfortunately, this trade got stopped out at break even because we did not hit our profit target. So I was a bit confused, and we continued consolidating until we actually hit the New York session. Of course, we had some beautiful fair value gap entries along the way, such as this one right here, and followed by this fair value gap right here. Of course, those are bearish fair value gaps, so we are going to color them in red for a continuation move to the downside towards our previous day low. And what do we get right here? A beautiful rejection of our previous day low. So basically what you can assume what happened here is a rate of sell side liquidity and a trigger of breakout traders. Daily breakout traders are now, even with just this little small wick, triggered into the market short. And that's important, and that's why we see this massive reaction now, that lots of daily breakout traders are triggered short into the market. They use the volume that's basically short positioned now to accumulate long positions and quickly reverse price up above our previous day high. And then what did we do? Once we reached our previous day high, we went all the way back down to from where we basically initially started, where we left behind this nice and lovely little fair value gap right here. This is a pump and dump pattern, and that's why your previous day high is super important. As a rule of thumb, you can say that usually price moves up to 25 to 50 pips above your previous day high to trap enough volume long into the market to eventually just completely reverse price on them, and left them standing there watching and hoping that prices are going to come back up to their entry, but price is very likely never going to return to this specific entry above your previous day high. Of course, this is not true for extension days, where we continue making higher highs and higher lows, because if our previous day high and previous day low would work every time, we would only see a consolidation on every daily chart. But we also got this consolidation theoretically on our daily chart for the past, let me turn this off, daily high low. For the past 1, 2, 3, 4, 5, 6 days, we actually just went sideways. There was no big candle indicating any interesting direction. For the past 1, 2, 3, 4, 5, 6 days, basically since Thursday, the 22nd of December, we just continue sideways. And what do we see? Every time we wicked above our previous day high, we reversed. Wicked above it, we reversed. Wicked above it, we reversed. Wicked below it, we reversed back up. You see that right here? And now we're back inside of our previous day's range. That's why, in my opinion, this previous day range is very important, where we see most of this. Let's say it's a very easy way of looking at it in terms of support and resistance. So we see this break, and what we can do now is we can break it down to a 1 minute time frame, where we actually see it a little bit better. We wicked down below it, instantly it got bought back up, and then by using my indicator right here, let me actually turn it on. Yep, 1 minute time frame. we saw that we had a beautiful downtrend into our sell side liquidity, triggering short traders into the market, short breakout traders, as we said, into the market. And right here, as soon as this green candle closed, I entered into the market with my stop loss right here on our previous day's low, targeting my old target from my trade during the London kill zone right here, where we did not hit our previous day high, but there's still some liquidity. And you see how the previous day high, or this whole liquidity pool, acted as a magnet basically for price. We went up there within 45 minutes, and that's a 54, like I mentioned before, 55 pip move. Of course, it's not going to take the fastest way to the other side, to the other liquidity pool, but usually, generally speaking, on a inside day or a day that is not extending your previous day by much, or a consolidation range like we for example see on Bitcoin and all the cryptocurrencies currently on a lower time frame and also a higher time frame, your previous day high and previous day low is really important. Do your own back testing, you don't have to believe me, just look at it, and also look for classical charting patterns right around your previous day low, because I'm pretty sure here we could have drawn some sort of trend line narrowing down right here with a fake out and a breakout to the upside to our next buy side liquidity pool. So something else that's really interesting is what happened above our previous day's high. So if we get rid of all this stuff again, we see that we kept on making higher highs and higher lows all the way up. Then we held some support on our previous day high. And then we formed our swing high. We broke the swing high, forming our most recent highest point for today. So we are circling this point with a yellow circle just to point it out, making this range right here our most recent swing high, swing low structure. This right here is our most recent high or low of this uptrend to the downside, and this is our most recent highest high of this move to the upside. So up until this point right here, we had a confirmed bullish market structure. But right as soon as we broke this right here, we had a change of character or a market structure shift, whatever you like to call it. Market structure shift. And what did we leave behind on the way down? Let me actually disable my candle coloring, because that's not really something that I want to cover in this stream. We left behind a beautiful bearish fair value gap that has been triggered. So for example, I did not take this trade because I was happy with the profits I made, but this is just emphasizing the importance of your previous day high and previous day low for, let's say, rather less volatile trading days. Your stop loss, according to ICT concepts, would have been either your most recent short-term swing high, which for example could have been this one right here, or the candle that created the fair value gap. Let's say we place our stop loss right here for a fair enough 15 pip stop loss right here on GBP USD. Then we do what we do best all the time. We search for profit targets, sell side liquidity. So first of all, I would draw up all the fair value gaps that we could react from, which would be, for example, one of those two right here. We can also draw out some significant lows. Next fair value gap would be right here. Another row of fair value gaps basically would be sitting right here. So there's plenty of areas to look forward to take profit. So what I did then, or what you could do then, use your Fibonacci retracement tool, extend it out, and then now we can measure by how much the price actually retraced according to our previous breakout, which actually took out the sell side liquidity below our previous day low and the buy side liquidity above our previous day high. So we are charting up our 50% level, our 61.8 level, our optimum trade entry, and stuff like that, where we would expect or anticipate a potential reversal. So we have the 0.5 level drawn up. Now we are going to disable those three right here. We want to see the labels. No, that's all right. So we see our 50% level. Let's actually turn off those other lines here as well. So of this 100% expansion to the upside with a market structure shift confirmed, a entry on a bearish fair value gap right here that has been left behind after we had a confirmed market structure shift or change of character. We could have entered short right here, which would also be perfect because we entered short above our previous day high, which is a great opportunity to sell high and buy back lower, and vice versa if this would have been our previous day low, to buy low and sell it back up higher. That's the only way how we as traders can make money in this market. That's why it's important. We want to identify points where we can actually say that we bought low and we can sell it back at a higher price, or a level where we can like say or agree that we sold high and that we're buying the asset back lower. So now we see our 50% level, and I don't think this is coincidence at all that we've had our first bounce of our 50% level to continue retesting this narrow consolidation, or maybe this fair value gap that has been left behind right here. Retesting that one right there. Also understand this is a CFD, so we can't really look for volume inefficiencies and stuff like that, because the chart is going to look slightly different. For example, if I'm now choosing a different broker like FXCM or Forex.com whatsoever, because the Forex market unfortunately is decentralized. So we had our pullback to our 50% level of a 100% extension to the upside. We pulled back. By the time you could have already traded your stop loss down, maybe towards here. So in case price is going to reverse from the 50% level, you at least protected your position. So right now we're already running nicely in profit from our initial stop loss right here. This would have been a 1.45 risk to reward ratio trade. Our next profit targets would have been fair value gaps, where we initially got a beautiful bullish reaction from. We wicked right through this fair value gap and we closed back bullish. So this would have been your next profit target, where you could have, for example, closed maybe, I don't know, around 25%, 50% of your trade, depending on your mood, depending on how much profit you made on this day already. Trading your stop loss down now even further, but I'm going to leave it at where we had it at the beginning, which would have netted us a 2.2 risk to reward after a 55 pip extension to the upside. This, of course, would now be considered ICT, smart money concepts. I did not check how it looked like with master script, with the DR IDR script. I think it got spooked out a few times today on British pound US dollar, but that's just how simple it can be, and especially where to look for those patterns. For example, for the ICT 2022 mentorship model, above your previous day high and below your previous day's low. So do your analysis and do your back testing yourself, and we see fair value gaps actually continue to hold some support right here. For example, this last one right down here. Beautiful price delivery today on pound US dollar, and so you could have continued trading your stop loss further down, or for example taking small profits along the way. This would have already been a 2.73 risk to reward target, and right here this very last fair value gap that we had here on the 1 minute time frame would have netted us a 3.84 risk to reward ratio, depending on where you place your stop loss. Of course, you could have also had a tighter stop loss if by using the high point right here, which would be a 12 pip stop loss, but I think most of us would feel comfortable with a 15 pip stop loss. So even if it's continuing to fill more of this fair value gap, we are still good to go, and we're not risking too much, because your 1% risk per trade calculation, or however much you're risking per trade, would all be based on this stop loss number. All right, so we continue dropping, reacting bullish of those fair value gaps. So let me actually correct the color of those. Otherwise, I think it's going to be confusing from some people. All those fair value gaps are considered bullish fair value gaps that we could look forward to take profit from. On this quick drop to the downside right here, we also left behind some bearish fair value gaps where we could have anticipated a bearish reaction from. All right, that's fair value gap right here. Quite a few fair value gaps rejected off this one already. Then we had another very, very small one right here that we did not reach. But of course, let's say, for example, I'm choosing a FXCM or 100 chart over the 8-cap chart. Could have been very likely that this wick maybe was a little bit lower, and then we actually wicked into this fair value gap. That's again the problem with Forex CFDs. I'm just using the 8-cap chart because 8-cap is my current broker that I'm really happy with. So I'm only looking at what I see based on the 8-cap chart. If we did not hit this fair value gap, we did not hit it. Maybe we hit it on a different chart, but that's also why I really enjoy trading US indice futures. So just by basically looking at your previous day high and previous day low from yesterday, or for example today right here, our previous day low that we marked up earlier, could have, for example, caught this reversal right here with some confluence. Maybe use indicator, maybe use trend lines, whatever you use. The chances that you could have caught this trade would have been rather high. Now forget the trend line right here, especially after, let's say, maybe not this one because there's no real setup behind it other than looking for a reversal opportunity. Maybe you could have used a RSI indicator or a OBV indicator that indicates that we are rather oversold right now, and that we also just triggered our short breakout traders into the market. And that very likely the day before the new year ends is not going to be a very volatile or range extending day, relatively speaking, to our previous day range right here. So we reversed, but ideally you want to look for actual reversal confirmation patterns, like for example the 22 ICT mentorship model with our change of character, market structure shift, pullback into fair value gap, continuation lower, and as a measure for profits we could use the overall sell side liquidity down here, or we can use fair value gaps on the way to the downside to slowly scale out of the market. We could also check higher time frame fair value gaps so we don't have to do so many. We even had a higher time frame fair value gap right here on the 5-minute chart, for example. We had another one right here, another one up there, but I don't have to draw this up right now. I don't think so. You could have also, for example, went to the 1-minute chart and draw the volume profile of this very quick move to the upside to search for volume inefficiencies. So what do we see very clearly? We see this volume inefficiency right here, where we had actually a, let's say, a quick move to the upside where we left behind a fair value gap. So this, in my opinion, would be considered a confirmed fair value gap where we had this bullish reaction from. Next area of very low volume but big candles or fair value gaps would have been right here. Here's our volume point of control, again followed by a area of very low volume right here, of which we reacted afterwards. That's how I like to confirm my fair value gaps, just by using the volume profile. I'm not sure if you need a special premium TradingView membership to use the fixed range volume profile, but if you do, I'd say it's not premium subscription or a Pro Plus subscription. It's not worth the fixed range volume profile, but all the other cool features that come with it. So we see the volume point of control actually playing out right here. We accumulated back again at our volume point of control, pulled back into one of the fair value gaps right here that have been left behind on our way to the downside. We will see if we can actually take out the sell side liquidity that has been created now here. But a very beautiful setup a 22 ICT mentorship model, which was easier to look for with looking at it from a perspective that we are looking for reversals above our previous day high and below our previous day's low. Keeping that in mind, this could have been a very, very, very easy trade setup that most beginners would have been able to catch if you studied the 2022 ICT mentorship model right here. All right, let's go back to the ES. We see we are still inside our support and resistance range. If we turn on our DR, IDR low right here, we see we're still inside. We don't have any clear confirmation yet if this wants to continue bullish or bearish. We can check our indices comparison chart. We see that only Nasdaq closed up high right here, forming actually some SMT divergence, forming a lower low right here on the S&P, even though it's not very significant. On US 30, we actually formed a significantly lower low, but on Nasdaq we formed a higher low, giving us bearish confirmation for that this might not be an actual breakout of our range for a continuation move further to the upside. All right, we did violate the low, but not with a close, which could actually end up as a retirement setup. So we are going to take a quick paper trade. I have to check the time. All right. Still got a little bit of time left for this live stream. So let's just take a fun little buy here on US 30 and a buy on Nasdaq based off the 50% level of our DR slow. Already running nicely in profit. There's no nice and clear 5-minute setup on the SP 500. We could check the 1-minute time frame for that. Maybe we have a fair value gap that has been left behind. There's an older fair value gap that already has been mitigated right here, which we could have used as a support and resistance level. But let's go back to our 5-minute. So we see that ideally we got an entry on Nasdaq 100 right here based on our 50% DR range and our retirement setup right here on the E-mini Dow Jones future. So we will see how this trade plays out over the course of the rest of the live stream. We will find that out. But again, to sum everything up, the importance of your previous day high and previous day low. Here it is. Those are good areas above your previous day high and below your previous day low, within a range of roughly 50 pips, depending on the asset class. A little bit more, a little bit less, depending on the volatility. But that's when you can actually look for example, your 2022 ICT mentorship model without having to go further back and look for a fair value gap that we could have reacted from. Maybe we had an old fair value gap somewhere up here that has been left behind. But instead of looking, here's the next perfect example. Remember, this white line is your previous day high, previous day low. I don't even have to go too far back to look out for it. What did we see? We continued making higher highs and higher lows. Hang on, we are not going to color this in blue. We make this white lines, higher highs, higher lows. For our most recent swing high right here, making this our most recent market structure wise swing low. We broke it right here. We pulled back. Here ideally would have been a very beautiful fair value gap that has been left behind. We pulled back. We did not see a fair value gap that formed right here, so we had to wait. Maybe on a different broker we would have seen a fair value gap. We continued up, continued down, and we left behind a fair value gap right here. Of course, not a fair value gap from the initial impulse swing further to the downside, but as soon as I would have seen this reaction from the fair value gap, that would have given me enough confidence to take the short right here with the stop loss right at the previous day high. That would be a effective 10 pip stop loss, so enough room for you to play around with your first targets below sell side liquidity, for example those relative equal lows, continuing to fill fair value gaps on its way to the downside. No, we did not break our previous day low, but that's just another example of this pump and dump scenario and why your previous day high and previous day low is so crucial. For example, to look for your 2022 ICT mentorship entries, and only if you see something like that, we can also measure the range right here. We had a 13 pip extension above our previous day's high. So really interesting. We could look for more examples, but I think I made it really clear the point I was trying to make with the stream. So you can use the script of Unknown Unicorn right here, your previous day high and low. You can draw it yourself every day. Maybe it helps you a little bit more for your learning process of why it is important to look at it. You can watch it on multiple, for example, assets right here. This is my high and low watch list where I basically set alerts. I've got my own little indicator for the previous day high and previous day low where I can simply add alerts, and then I just have to wait for notifications to pop in. Okay, for example, Euro US dollar has broken its previous day high, or USD JPY, or gold has broken its previous day low. Whatever, those charts are going to be interesting for me, and that's where I look for my 2022 ICT mentorship entry model. And yeah, that's how I'm trading nice, impactful, impulsive reversals. All right, so let's go back to our current price action. I want to double check for one more example because I stopped trading after this, after my take profit target at our previous day high has already been hit. Get rid of all this stuff here, please, for a second. I think the general idea is clear right here with our market structure shift, bearish fair value gap fill. All right, so now what I like to do is I'm going to plot the DXY on the same chart. So what I'm going to do is I'm using the compare symbol tool right here, and I'm going to use the DXY on the same, no, not on the same scale. Oops, that was a mistake. We're adding it and we're choosing a new price scale. So now we have a second price scale on our chart. And now what I like to do is I like to click on invert the scale. So we're actually comparing highs and lows. Then I'm double clicking on this line chart, selecting the style section, choosing candles, and then I am able, hang on. So now I'm able to compare highs and lows with each other. And we see that we did not have any SMT divergence, unfortunately, here. But for example, let's say you would have watched your DXY at the same time and you would have seen that, for example, this high was lower than your previous high, and you would have seen the SMT divergence right here. Let's say, for example, hang on, let me zoom out here a little bit. Let's say this was a lower high, and right here we would have made a higher high with a bearish engulfing confirmation right here above our previous day high, continuing lower, making our market structure shift into bearish market structure, filling this fair value gap. This could be another confluence to look for above your previous day high to put some more confirmation and give you some more confidence for staying in your trade and keep on holding it. Let's go over to our indice comparison. Our trades are running nicely. Beautiful reaction of the 50% level. That was a lucky catch, I'd say. Nice. We will see if this could actually be a target for our 0.5 standard deviation. So I'm going to place my stop loss right on the 50% level. And our take profit target right here above the swing high. And for US 30, we are going to do the same. Let's go for our DR high. That's going to be enough. I'm not going to be streaming very likely until then, because I have to leave to the movie theater because I'm watching the new Avatar Ways of Water movie. I'm really excited. I've been waiting to go to the movies for quite some time, because in this stream I just wanted to point out the significance the significance of your previous day high and previous day low, which clearly showed some beautiful setups today on GBP USD. We can also check it out on a few other charts. Today on Euro US dollar, we did not break our previous day. So yesterday we had a very similar setup. We had our peak formation right here. We consolidated and we reversed. Even we did not reverse by much, relatively speaking, but we reversed above our previous day high. And again, here's our new previous day high from Thursday. Now it's Friday. What do we get? We triggered breakout traders long into the market. We consolidated, trapped them up high, reverse price, filled in fair value gaps right here, continued further lower, taking out sell side liquidity below major lows, filling in fair value gaps. I'm a little bit too lazy to draw it all in. I'm sure you guys are all able to spot that yourself. Made, let's say, more significant swing low right here. Beautiful fair value gap, continuation up high, took out our high that we formed at 6:40 a.m. New York local time here, Friday 30th of December. Again, continued to reverse for a beautiful 2022 ICT mentorship model, even though we did not get a clear change of character right here. Could have been a nice short opportunity to take out sell side liquidity below equal lows. We can continue to go through the charts to prove that this concept is actually working. Same today on gold US dollar. Of course, gold's a little bit more volatile than most of the other asset classes, so roughly give it a good range to basically do its thing above the previous day high or below the previous day low. But generally speaking, you see how it tends to play out, and to be a area where you don't at least want to continue longing the market if we're already above the previous day high and you're not anticipating. Here's an example for our previous day low. This was very likely a London session setup where we triggered shorts into the market, and what do we see? A massive buyback inside of our previous day range. We consolidated just above our previous day low, closed below it, and boom, out of nowhere there was enough momentum in the market again. And that's not random. That's the importance of the previous day high and previous day low. Very similar, something right here below our previous day low, but this time during the New York kill zone, the PM session, for a reversal back up. We can also check, let's check US oil. Reversal below our previous day low, wicked into it once, twice, 3 times. 1, 2, 3, 4 above the previous day high. Same here. Those are interesting targets to always have on your chart, in my opinion. I also like to use the previous week's high and previous week's low. They pretty much go hand in hand with what we did here now on a daily perspective. So our previous day high, previous day low. Of course, your previous week's high and low are also going to play an important role, especially if they're lining up. So yeah, that's what I wanted to point out with the stream. Let's go back to our overview and see how our trades are working out. We will see if this is actually going to play out as the typical retirement setup. We left behind a fair value gap on which we really don't want to see a close. Same here on US 30 or the Dow Jones. Right here. DXY, still consolidating. Let me get rid of all those drawings here quickly. Another example for reversals below the previous day low, above the previous day high. gapping in between to open up for the new day. Pullback, reversal, broke the previous day low, pulled back, broke it again, pulled back, broke it again, pull back. It's a significant level. I think I made that point very clear. All right, so let's check our range again. We're still consolidating, so no ideal setup or entry opportunity here on the SP 500. It is the last trading day for the year, and I have to get ready very soon, so I am going to finish this live stream. If you have any questions left about the previous day high and previous day low, the stuff I just presented, just ask the question, and I in Discord chat or on a YouTube live stream, and I will do my best at answering them. So I'm going to wait for a little. If there are some questions about the importance of the previous day high and low. And of course, don't trust me. Go through your charts, use this indicator by unknown unicorn. Look at your charts, look for classical charting patterns above your previous day high. Like for example, a head and shoulders, a double top, a triple top, a 2022 ICT mentorship entry model with a market structure shift, entry in a fair value gap for a short trade, everything vice versa for a long entry opportunity. And I think you should be set. Really appreciate the presentation, thanks. No worries, you're very welcome. And other than that, I think we will see if there are some more questions popping up. Let's go to our overview to see how our trades are performing. All right. DXY. Didn't like the price action on DXY today at all. Really messed up some of my pound US dollar trades, other than this beautiful reversal. After which I actually took my dog for a walk, so I missed this beautiful setup, but it is what it is. You can't profit on every setup the market is going to present you, even though this would have been a better setup than the one right here. But that's just experience. Same for the example I made with TheMas7er earlier for the overnight range. Right here, if we turn on the indicator, if you have the experience and you use the system for, let's say, at least half a year, or you've been looking at the concepts for multiple years, you've got the experience to use very small stops, and you get a gut feeling and all that stuff. It's pretty much like with every profession, which very likely most of us have learned over the course of our lives. So I don't know, if you are talking to your boss about something related with your job, chances are very high that he's going to know what you need and blah, 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 because he's got the experience, he worked there his whole life and stuff like that. So I'd say we can let those trades run. They're on paper trading accounts anyway. I'm using my take profit right here at the swing high. I'm not going to target the 0.5 standard deviation. And my take profit right here at our DR high for a potential retirement setup. We will see if this is going to play out. So yeah, I'd say it's the end of 2022. Everyone should be getting ready for the new year 2023, especially trading wise, what you can do better. And I've got a little list of a few things to keep in mind for a fresh start into 2023. First of all, what I am going to do is I'm going to set clear goals. And for example, this means what I want to achieve as a trader, or what do you want to achieve as a trader? Answer that question, sit down and think about it for a little bit, and try to make some goals out of what you want to achieve. Whether it's increasing your profit, expanding your portfolio, or learning new skills, it's important to have specific goals in mind. And this doesn't have to be a goal that I want to become a millionaire next year. You can break down your overall goal into smaller goals, that it's actually easier to track your progress, for example, to basically have smaller goals, like for example passing a FTMO challenge. If you never pass an FTMO or a funded prop firm challenge, This could be your first goal for 2022. The next little thing to keep in mind for the next trading year would be to develop a trading plan. A trading plan can help you to stay disciplined and focused, and to, for example, keep you away from FOMO and all the emotions that can trigger while sitting in front of especially a low time frame chart, to jump into the market without really thinking, and afterwards you look at your trade and you're like, shit, what have I done? This is why a trading plan can help you if you actually stick to it. And this trading plan should also include things like risk management and your entry and exit criteria, your overall trading strategy, your self-management, how you manage yourself during a trade. And another great thing for a trading plan, and after you set clear goals for the new year, is to start journaling your trades every day. This also helps you from over trading. So if you usually take, let's say, more than 10 or 20 trades per day, you're going to have a very hard job with journaling all your trades. But if you start now, let's say you set a daily trade limit of 5 trades per day, it's an easy job to simply write them into your journal and keep track of them. And after the week's over, maybe on the weekend, you look at all your trades, you take some notes, what you could do better and stuff like that, to actually improve week by week starting next year. Another important thing would be to stay focused and disciplined. Trading can be very unpredictable, but by staying focused and disciplined, you can increase your chances of success. Another important thing is to be patient, because trading requires a lot of patience and the ability to wait for the right opportunities to arise. And there's something really interesting about this. At the beginning of my trading journey, I was a chaser. I tried to chase the market. I see a massive bullish candle forming and I jumped onto it. I chased the move instead of sitting there waiting patiently for my setup to form. Like, for example, a perfect 2022 ICT entry model like today on GBP USD. Instead of chasing the market while it's on its way to the upside, I'm sitting there patiently without any fear of missing out, to wait for my opportunity, and only if the opportunity arises according to my trading plan, I'm going to hit the buy or sell button. Okay, also being patient to wait for your take profit target to be hit and not to close your trade early on, for example. That's also where you need a lot of patience. I struggled with that a lot at the beginning of my trading journey. I always saw the profits and I thought, no one ever died with taking profits early, but that's actually how you mess up your whole probability and your statistics. For example, if you're using a back-tested strategy with a given win rate and everything, and your whole profitability is based on your money management, your risk management, and your, what's it called again? I forgot. Doesn't matter. And least but not last, you have to stay true to yourself. It is important because again, let me start again. You have to stay true to yourself because it's important for yourself and your own trading style, because everyone has his own trading style. Not everyone prefers to trade the ICT 2022 mentorship model. Maybe you just like to trade double tops and double bottoms and you're really good at that. Then just focus on that and stick with that. Stay true to yourself. Go through all your trades of 2022. I know it's a lot of work, and look what trades have been the most profitable for you. And if, for example, let's say out of all your trades during 2022, there's a clear connection between your most profitable trades and your, let's say, most of your losing trades, you exactly know what you should continue doing and what you should avoid next year. It's as simple as that. And yeah, like mentioned, the most important thing is to find a trading style that works for you, and you should stick with it. Stick with it. Do at least 100 trades based on your strategy, your trading style. And after those 100 trades or 200 trades, If you're not profitable or you're not happy with the strategy, then you can say, I'm not going to continue with the strategy. I'm going to look for something else. Then it's fair enough, but not after a day or 2 days. That's not how it's going to work, because with every strategy, you're going to have eventually one bad day, one very bad day. And if you're going to throw the towel on this day, you're going to be annoyed because maybe next day is going to be the best day ever using this exact strategy. So yeah, use your strategy and stick with it. That's very important. And remember, trading is a marathon, not a sprint. With hard work and dedication and the right mindset, you can definitely achieve your trading goals in the new year and beyond. So create a trading plan, a trading journal, stick with it, learn from your mistakes, and yeah, I think it's as simple as that. Let's again check our futures chart after this little New Year's motivation speech, more or less. I don't know if it has been motivating, or maybe you can take something from it and try to improve your trading in 2023. I hope you can. I've been through that basically over the past few days, been planning and working on a plan, for example, for next year to pass my prop firm challenge for FTMO. I think I'm going to start with FTMO or maybe with my Forex ones, and also with a future funding firm after now profitably scaling up my private trading accounts to use as a little boost. My trading plan, by the way, or my trading goal is to average 1% profit per day. I can also share that and compound that on a daily basis for the whole year of 2023 and to accumulate crypto. All right, guys, I think that is going to be it for me for today's live stream, because I have to get going to the movies. We will see if those two trades play out. Looks all right. Looks like we actually got a impulsive move from this fair value gap right here. We just wicked into it. We also wicked into it on NASDAQ. No, but we touched the level at least again. Beautiful entries running in profit. A very nice way to end this stream. By the way, we also hit it on SP500. So to anyone who caught those entries right here based on this fair value gap or based on the retirement setup right here, congratulations. I would take my profits now and go to the movies as well. And yeah, I wish everyone happy New Year's, because I'm not going to be live streaming tomorrow. Markets are closed today, or are closing today. So take care and start right into the new trading year. I think we will see each other next year on Discord again, ready to attack 2023. All right, guys, take care and enjoy the rest of the year.